This is Bob Anderson, and I'm on day 3 of my Apex Trader Funding Challenge. Today is August 17th, 2022. Just a little update. I usually, every morning, I'll get up and read what kind of news, market impact news there may be going on every day. And I indicate that on my charts so I know to pay attention to that timeline because I don't want to be in a trade or whatnot. While doing that this morning, I noticed that 2 o'clock in the afternoon, there was going to be a release of Federal Reserve minutes. And that's never good news because the market has a tendency to be really quiet leading up to that news, and a quiet market is not a trending market, and my trading really depends on trending. The other thing is it's the dead of summer. I mean, it's the middle of August. A lot of the big traders that move the market around, which is what I try to jump on the back of those traders. A lot of them don't even exist right now. They're on vacation. But anyways, my results for the day were 1 win, 1 tie, and 2 losses. The tie, you could call it a loss. I was at break even, and I had 1 point slippage for a negative $25. But anyways, I'll call that a tie. And then the 2 losses, one was actually kind of big, and then and one was relatively small. I think one was like $100. The other one was like $300. I didn't get the win until the end. The win was rather large. It was about $900 or so. Anyways, the net for the day was $487.50, which I'm happy about considering I found out that they were going to be doing the Federal Reserve minutes today. But anyways, and here's the thing: once I hit that big trade and I got my $480, I shut it right down. And the sad part is, literally 5 minutes after that, I'll show it to you on here. But the perfect trade, the best trade of the day, literally set right up in front of me, and I just sat there and watched it happen instead of taking part of it because, with my strategy, you got to be in at the beginning. Because if you're chasing the trade, that's a mistake. Anyway, so let's go over the trades, and it's a good bounce back though from yesterday of not making any money. That makes our total for 3 days, net of commissions and everything, about $850, which is I'm pretty good with. So, anyways, here we go. If you remember, I trade off of this 1 minute chart of the ES, which is the S&P 500, and this is my 5 minute chart that I use as my directional indicator of my trades. Okay, so they sit side by side. So I trade off this one and I look at the one to the right. Anyway, so on this chart, you will see that we have news. As I said, I saw there was news. This is 8:30 in the morning. And so I got a big old red line right here and news. I typed news in here for you guys. I know what the red line means. But anyways, and then over here I did a dotted red line for the open. Now this is the open of the market. Okay? The market opens at 9:30 Eastern Standard Time. I'm on Eastern Standard Time. This is the 9:30 time. I like to look for trades in this area if we're going to go into new directions. And then I also like to look for trades after this calms down through till 10:30 normally, just to try to find a trade or two. So this morning we had a push up, back down, and a push through our pivot right here. By the way, let me just discuss one thing about news. Here's why you don't take trades around news. This candle right here is a 1 minute candle. The spread on that candle is from 42.75 to 42.66.50, almost 10 points in 1 minute. That is just freaking huge. Okay, you just get chopped up like a salad, and you'll lose all your money. So you got to wait for that craziness to calm down and then start trending. So here we go. We went up, down, up, broke this pivot right here, pulled back into this area. I took a trade right here, which was the gold line. I was going to do my gold line and then my long entry right here, hoping that we were going to go that way. And instead I got crushed down here. Let me pull this, let me break this open so we can see. I was in at 42.74 and I got knocked out at 42.72.50. It's 2.5 points, bam, right in the face. Anyways, that doesn't mean the trade was bad, because it did pull in deeper and then it ran up. So I had an entry set right here at 42.73.75 for 2 contracts. And I got filled actually at 42.74. Usually, let me point something out about slippage. If you have slippage, which that was slippage against me also, normally that means you're jumping in with a bunch of other traders, because that area got overloaded with either buyers and or sellers, depending on what's going on. So that's usually a good sign, to be honest with you, if you go into a trade with slippage. But anyways, that trade ran up, and honestly, it was up about $250 some or so. And my break even was I put my stop at break even, which again was 42.74. It slammed down. This is why you use your stops. It slammed down, and I got slippage to the negative and got filled at 42.73.75. So I lost a tick, which on 2 contracts is $25. And look at what happened after. There was a bunch of stops lined up doing the same thing as me. There was a bunch of people running it this way, and there was a bunch of people whose stops were behind me, just getting chewed up. So I feel very fortunate that I traded it properly and only lost 25 bucks. Because I can tell you all the way down through here, there was a lot of people losing a lot of money. Anyways, so then we get, let me consolidate this up, and we just start chopping here. There's nothing setting up, no pivots being broken for me to take a trade direction, any direction whatsoever with my 5-minute chart. And then bam, we have the market open. Okay. Same thing as I talked about before. Just with the market open, you got to wait for the craziness to kind of subside, and then try to find a trend and get in it. Now, I'll be perfectly honest with you. I got in this one too quick. I went in here just probably being a little too anxious, because I didn't make money yesterday. I tried to jump in with 1 contract on this yellow line here, and then I was going to try to do another one off the break of the candle, and it just ran me right over. And I lost a lot of points, lost a lot of money, probably $200-300 on that 1 contract. I wasn't happy. The sad part was, and you can't see this, but on my 5-minute chart, it was screaming that we're going long. The 5-minute chart was just literally screaming, long, 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 long. And so when this pivoted back up and rolled over and broke the candle, I went long 2 contracts right there. I mean, my 5-minute chart was just screaming, long, 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 long. And I trust the 5-minute chart more than the 1-minute chart, because the big money trades the 5-minute candles. The longer the candles, the bigger the money. To be honest with you, because they're looking for bigger trends. They got bigger pivots, bigger bigger stop losses. That's where the big money normally is in the bigger candles, the longer time frame candles. So anyways, I grabbed the long here. Boy, that thing chopped around. Where's the other one? Oh, I took the first one off the gold break of the candle here. I'm sorry. Let me get this right. The first one was the break of the candle here. This candle right here. Long. Because again, my 5-minute chart was screaming. Ran up, came back down, ran up again. I took 2 more long. So my average was off of 42.73.50 and 42.75.5. My average was 42.74.25. And this thing just screamed up here. Bam. I'm out at 42.78 minus, and I had 4 contracts in it, which was a win of 18 points, which 18 points at $50 is $900. $900. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes. Again, my 5-minute chart was screaming that this trade was going to work, and it did. 11 minutes is a long time for me to be taking these trades. Just to be perfectly honest with you, I mean, I don't intend to be in these trades for for like 11 minutes unless I'm following up. That's a different concept. But anyway, so that's when I started thinking to myself, man, that this afternoon Federal Reserve minutes thing has really got the market not acting straight. Anyway, so we broke this. See this pivot right here? We broke this pivot up to here, ran it down into this trading zone again, and broke right here. And that was the trade of the day that I missed. I should have been in at 42.78, and I should have ran it all the way up here to 42.83.75 for 5 points. That would have taken, see, that trade would have been 1, and really the end of this candle. So 1, 2, 3, maybe 4 minutes. Maybe 4 minutes would have been $500 on two contracts if you just did the 2 contracts, which is what I would have done on that trade. $500 in literally 3 minutes, 2 to 3 minutes, and I missed it. Of course, I was happy with my $487.50 at this point after getting punched in the face on two trades and then that break even that rolled up, like I said, 200-300 points and then ran back against me. I was kind of like, okay, I'm done. And then the market started acting squirrely again, and then it starts doing this consolidation stuff, and it's not really doing anything because, and I'm going to get to that. Let's go over here. There it is, right there. That's when the Federal Reserve minutes got released. And bam, look at this craziness. Just again, this is 2 o'clock in the afternoon. Most traders are not even around anymore. And look at all this leading up to it, for hours leading up to it. There's just nothing there. This is not going anywhere. There's no way you can make money into that. Then all of a sudden the Federal Reserve releases their minutes about, their perception of the economy, all their lies, same lies the government does all the time too. And then and the market just goes crazy. And then it slams down, slams up, slams down, and then it closes at basically the same place it was consolidating at all along. Is that not ironic? So they use this news report as just a reason to move everything around and take people's money. So you just got to stay away from that stuff. Anyways, so that's my market update, my trading update report. Once again, I attribute my success of today to understanding what those Federal Reserve minutes coming out at 2 o'clock this afternoon, what that really meant to the market. And that I needed to, if I was going to make money, I needed to make it early, because as the day went on, there was going to be no rhythm to it whatsoever. The other thing I attribute it to is being willing to ignore the fact that I just lost money on the previous trade. I mean, technically, I had 1 win and 3 losses. But reality, 1 win, 1 tie, and 2 losses. And even with 1 win, 1 tie, and 2 losses, I still ended up $487.50 ahead. So, and that 487.50 was my last trade of the day. So that spread my trailing stop, which is another story about Apex trader funding. There's a trailing stop that follows my money, that I cannot let my equity position fall below, or I lose my funded account. So as long as my days end with winners, that trailing stop will stay away. It's kind of hard to explain. But anyways, that's it for my day. In my funded account with Apex, they have a graph that when I get further along in this, I'll open up the graph and I'll show it. It's just the graph is always a day behind, so there's really nothing to show on the graph, because I had the one day that I made $400. The other day I lost, I broke even, and then I'm on day 3 where I made $487. So the graph won't even show the 487 because it has to. When after the market closes out, they update the stuff overnight. But it'll be cool to look at as time goes on, because there is a true equity graph that'll show that I'm not making this stuff up. Anyways, so you have a good day, and I'll talk to you guys later. Thank you. Bye.